Warren Buffett just sold all of his S&P 500 ETFs. He's also holding more cash than ever at over $300 billion. To put that into perspective, if that amount of cash were its own publicly traded company, it would be among the 30 largest companies in the entire world. And since Warren Buffett is arguably the greatest investor of all time, does that mean we should do the same and be selling our stocks and putting our cash into a high yield savings account? The answer is no. And you may have seen other headlines and content creators spreading this notion that Warren Buffett is selling his S&P 500 ETFs and holding more cash than ever, and therefore we should prepare for the worst. In reality, these articles are dead wrong and very misleading. So I wanted to make this video to set the record straight and hopefully keep you from making any investment decisions based on bad information. By the way, my name is Brian. I'm a former investment banker with a Master of Science in Finance, and my goal is to help you master the market. First, I want to show you an example of one of these articles that's been making the rounds, and it's from a website called Investors Business Daily. And you can see the headline here. It says, Warren Buffett shockingly dumps two stocks that he told everyone to buy. These two stocks are SPY and VOO, which are two low-cost S&P 500 index funds that we've covered multiple times on this channel. The writers then go on to imply that Warren Buffett is somehow contradicting himself because he's advised people multiple times to invest in low-cost index funds, but he seems to be selling his holdings in the S&P 500. As I mentioned earlier, this notion couldn't be further from reality, and we're going to look at that now using a free website called Dataroma. And this website is free, it's very useful, and it allows you to see all of the holdings and changes to portfolios of very big hedge fund managers, also known as super investors. You can see here that there are a lot of names to choose from. For this video, we're just going to Control F and search for Warren and go ahead and click Warren Buffett, Berkshire Hathaway, and of course, click out of these ads. Once you get to Berkshire Hathaway's profile page, you'll see every single stock that the company owns. You can also look at the activity, including both the buys and the sells. You can look at just the buys and you can look at just the sells. And so we're going to look at the sell section and see just how much S&P 500 did Warren Buffett sell. And if you scroll down here in the Q4 2024 section, you can see that he did in fact sell SPY and VOO. He sold 100% of his holdings, but when you look at the percentage change to the portfolio, those made up only 0.01% of his entire portfolio each. So while it is true to say that Warren Buffett sold all of his holdings in these S&P 500 ETFs, it's very misleading to imply that that somehow shows that Warren Buffett has some kind of negative sentiment towards the US economy or the stock market in general. In fact, if we go to the buy section here, we can see that Berkshire Hathaway is still buying individual stocks. And sure, when you look at the change to portfolio, these are all under 1%. But if you add all of these positions up, they add up to around 1%. And if we're talking about $1 trillion portfolio, which we'll see shortly later in the video, then that's going to be around $10 billion. And I don't think someone who has any kind of negative sentiment towards the stock market is going to be putting $10 billion into new stocks anytime soon. And if we look at Berkshire Hathaway's holdings, you can see that Warren Buffett is still invested in large US companies in a massive way. For example, he's still got $75 billion in Apple, $45 billion in American Express, $30 billion in Bank of America, and the list goes on and on and on. And these are just the public companies that Berkshire Hathaway is invested in. In reality, there are a lot more investments in private companies that the company doesn't have to disclose on this website. And you don't just have to take it from me, because every year Warren Buffett puts out an annual letter to his shareholders explaining his thinking on the economy, as well as some commentary on what he's been doing over the last year. These letters are also completely free and very easy to find. All you have to do is Google Warren Buffett annual letter. It's the first result that comes up, and I always get a kick at how simple this website looks. I mean, this is a $1 trillion plus company, and this website looks like it's from the 2000s or maybe even before. And all you have to do is go to the latest year, in this case 2024, and we're going to search for mentions of cash. And you can see that after a few entries of looking for cash, we can see exactly what Warren Buffett has to say about his cash position. He says, despite what some commentators currently view as an extraordinary cash position at Berkshire, the great majority of your money remains in equities. This preference won't change. While our ownership in marketable equities, which are publicly traded stocks, moved downward last year from 354 billion to 272 billion, the value of our non-quoted controlled equities, which are private companies that they own, increased somewhat and remains far greater than the value of the marketable portfolio. Now, he obviously doesn't mention here exactly how much that portfolio is worth, but we can get a sense for it ourselves by looking at the SEC filings of Berkshire Hathaway. All we have to do is pull up their 10K and look at the balance sheet section of this statement. And you can see here, this is an outline of all of the assets and liabilities that Berkshire Hathaway has on their books. And if you look at the top of this page, you can see here the $44 billion in cash and the $286 billion in US Treasury bills. This is that number that you see quoted in a lot of articles in terms of how much cash Warren Buffett is holding. Additionally, there's another line item here, which is investments in equity securities, and this one's about $271 billion. And this is the number of publicly traded stocks that Warren Buffett owns, which ties to the number that we just saw on the other website from earlier in the video. In reality, though, because Berkshire Hathaway owns 100% or a majority control of a lot of these companies, all of their assets get combined onto Berkshire Hathaway's books. So while there isn't a specific line item that shows the total value of these investments, we can get a general sense for how much these assets are worth by just looking at the total assets here, and you can see that it is well over $1 trillion. So if we take all this into perspective, it's got a fairly balanced 70-30 split or so between investments in stocks and other similar companies and his holdings in cash. Now, in reality, a 30% cash position, especially when you're talking about a number of over $300 billion, is still quite large. But I want to give you one more reason why that isn't a sign that you should be selling all of your stocks just because Warren Buffett has this much cash. And the reason is actually very simple, and that is because Warren Buffett is a value investor, and he typically likes to look at value ratios, for example, the price to earnings ratio. And based on this metric, US stocks have rarely been this expensive, so it's no surprise that a value investor like Warren Buffett is just not able to find good deals so that he can deploy all of that cash. Now, that might be all well and good for Warren Buffett, but you might still be wondering, what should you be doing for your portfolio? If the market's overvalued, if Warren Buffett isn't able to find good deals, should you be trying to time the market? Well, the answer is no, but I want to show you some research that demonstrates that even if you could time the market perfectly, you wouldn't really make that much more money than if you were just a normal investor dollar cost averaging. And I want to show you this article from Charles Schwab called Does Market Timing Work? And there's a really interesting graphic down here that summarizes the results of their research. In this study, the researchers ran a simulation of 4 different investors. They all got the same amount of money each year, except one investor invested that money at the perfect time. They perfectly timed the bottom every year. The next investor invested that money right when they got it, no matter where the market was at. So they just dollar cost averaged. The third investor had the worst market timing possible. They always bought at the highest possible price each year. And the last investor stayed in cash for the entire time. And you can see on this chart that while the investor with perfect market timing obviously outperformed all the other investors, it wasn't by that much, less than 10% more than the investor who was just investing the money they received right when they received it, no matter what level the market was at. In fact, the investor who did the worst was the one who stayed completely in cash because they obviously missed out on all of those stock market gains. So with that said, yes, Warren Buffett did sell all of his S&P 500 holdings, but he still holds 70% of his over $1 trillion asset portfolio in publicly traded stocks and other companies in the US. And while Warren Buffett is holding 30% in cash or over $300 billion, it's not so much that he thinks necessarily that the market is going to crash. There just aren't as many good deals for him to invest in the current market environment. And when it comes to market timing, even if you had a crystal ball and knew exactly when to buy the dip, you wouldn't make that much more money than someone who had terrible market timing or just invested their money right when they received it. And if you're looking for some tips with some additional ETFs to consider for your portfolio, you might want to check out one of these videos here.